Hey everyone, Alex LaRosa here, and today we're going to talk about Roth conversions, and specifically why doing a Roth conversion now is a very good opportunity. So let's back up for a second. What is a Roth conversion? Well, a Roth conversion is when you take traditional IRA money, whether it's cash or positions within your traditional IRA that you have yet to pay taxes on, and converting them into a Roth IRA. Right? So the catch is that you have to pay the taxes on the amount or the positions that you transfer over in that year, right? So if I convert $10,000 worth of traditional IRA money this year into a Roth IRA, I owe taxes on that $10,000 at my taxable income rate. It's like it's adding $10,000 to my income for this year, if that makes sense. So let's go over why you would do a Roth conversion. Well, one is you're looking to diversify your tax exposure, right? So by converting to a Roth IRA and paying any conversion tax from other personal assets, you are shifting more of your assets into tax-favored status, right? So remember, a Roth IRA has tax-free growth and tax-free withdrawals in retirement. Another reason is your income was too high to participate in a Roth IRA. So remember, Roth IRA limits are around 150 for individuals and around 200 for joint couples. So when you're over that, you can no longer make Roth IRA contributions. But one of your options are to do Roth IRA conversions, every year. A third reason is you think taxes are going to rise in the future, right? So what you're banking on is you're paying taxes now with rates lower. You're expecting tax rates to increase in the future. So you pay the taxes now, get the tax-free growth, and you won't pay the higher taxes later. A last reason is, do you want to maximize your wealth transfer to your children, right? So since the Secure Act was passed and traditional IRAs no longer are able to stretch out over your beneficiary's lifetime, right? They now have to take all the money out of the inherited IRAs within 10 years, which means they owe the taxes on all of that money over those 10 years. So if they take it all out in year one, they owe the taxes all in that year. If they spread it out, they still owe taxes, right? So it decreases the amount of money you can leave to your children. By converting money to Roth IRAs, the Roth IRAs still have to be taken out by your beneficiaries over a 10-year period, but they're tax-free. So they don't owe taxes on any of the withdrawals from that Roth IRA. So let's talk about why now is a better time than, let's say, a year ago. Well, as of filming this video, we're down roughly 20% from all-time highs. So your portfolio is a lower value than it was a year ago, right? So let's just say last year you're considering making a $10,000 Roth IRA conversion. Well, now those same assets that you were thinking about converting are worth $8,000. So you can convert that $8,000 banking on a near-term recovery, right? Or an upswing in the market to get back to all-time highs. It's more than likely you're going to have a 20% upswing sooner when you're down 20% than when you're at all-time highs. So you're making that $8,000 conversion with hopes that the recovery will lead to a quicker break even, meaning that the taxes that you pay on that $8,000 will be recouped by the gains in the next few years. So that is why making a Roth conversion now makes more sense than probably a year ago. And it's a nice opportunity for when markets are down and we're in a recession, possibly we're in a bear market. Think about doing some Roth conversions on any traditional IRA assets that you have. If you have questions about Roth IRA conversions, please find my information in my bio. Give me a call, send me an email, and I'd be happy to talk. Thank you, and have a great day.